The budget, Jeremy Hunt's first budget, and of course the big question is, what are we going to hear about? First of all, of course, there will be growth. What happens to economic growth, the state of the economy? Is there going to be a recession? This is what the OBR, the Office for Budget Responsibility, they do formal forecasts. This is what they were saying last time around. Look at 2023, the year we're in at the moment, 1.4% down. So growth going down, everyone getting less well off. That's a recession. What might happen this time around? Let's add some bars on with the average of independent forecasters. And look, the red bar in 2023, it's still down, but less bad than it was before, minus 0.6%. That's what independent forecasters say. But look over there on the far right-hand side, weaker growth, according to those forecasters, than the OBR was expecting last time around. That really matters, and I'll show you why. If we plug that into what happens with borrowing, how much the government is spending and getting in taxes, the difference between that is borrowing. Borrowing's been pretty high recently, very high indeed. The government's concerned about that, 140 billion in the next year. What happens to that if you assume we are going to have that kind of change in the growth forecast? Well, here's what might happen. Look, those red bars go down. So stronger growth in the short run, weaker growth in the long run, though. I'll show you why that matters in a second. On top of that, lower interest rates, so lower debt interest costs for the government. Look at the red bars. They go down a little bit more, so as a result of that. And again, energy costs, because energy costs are lower than expected. That means it doesn't have to spend as much on the energy price guarantee. Might have a bit more money to make it a little bit more attractive for households too. Again, those red bars going down. And actually, toss it all up, and you're talking about growth borrowing coming in about 30, maybe 40 billion pounds less than was forecast last time around. That's a really big deal, and potentially means the Chancellor has some money for a short-term giveaway. Why do I say short-term? Look at the right-hand side. Look at those two bars on the far right-hand side, 2027, 28. Actually, the red bar is higher. So more borrowing in the future, meaning he can't just splurge and expect to splurge forever necessarily if he wants to keep these bars going down, which of course he does. But then there's a question about what does that mean for us? What does it mean for public services? Here's public service spending and how much it's increased or indeed decreased over the last few years. You can see austerity there, but this goes all the way back to the 80s. And over that 40-year period, the average at which it was going up each year, about 1.8% a year. More recently, it did improve. So look at this. On the right-hand side, it went up by about 2.8% a year in recent years. What's expected in the future? Well, only about 1%. So not quite austerity necessarily, but really low increases by historical standards. Question is whether the Chancellor does anything about that, about public sector pay, or indeed about corporation tax, or the many other issues coming up. We'll find out more in the budget.